Welcome back students. In this particular video we are going to understand a very important aspect, that is voucher entry. Now we are not going to do the voucher entry practically in Tally. Definitely we will do that, but after one or two videos. But before that there are very important aspects that we need to understand. Voucher entry, if you are not doing it in Tally, let's say you are doing it on book, then there are three golden rules of accounting which we need to keep it in mind. The first golden rule is debit the receiver, credit the giver. Second is debit what comes in and credit what goes out. The third one is debit expenses and losses, credit income and gains. So it may seem a bit difficult for the non-commerce background, but just follow me in the examples, that will be easy for you to understand. So let's read out the first statement. The first statement here is rent paid by cash of rupees 6,000. Now do it step by step, so it will not be very much difficult for you. The first step is to find out two ledgers here. Now in this particular statement, the first ledger is of course rent and the second ledger is cash. The second important aspect is to understand the nature of those ledgers. Now rent has been paid, so this means from the company point of view this is an expense. So here the third golden rules, that is debit all the expenses and losses and credit all the income and gains, that will be applicable. So because rent is an expense, so that will be fall under debit, and definitely cash will be credit. So here we may see that rent account debit to cash account credit of 6,000. This is how this entry need to be done. Let's take a look upon another example. Commission received with check of SBI Bank of rupees 8,000. So here the second statement is commission received with check of SBI Bank of rupees 8,000. So we need to find out two ledgers. The first ledger is commission and the second ledger is SBI Bank. Now second thing, we need to find out the nature of those ledgers. So commission has been received, so this means commission is income here. So according to rule, commission falls under credit and SBI Bank is definitely debit. So the entry is going to be SBI Bank account debit to commission account credit. The third statement is cash deposited into SBI Bank of rupees 12,000. Here remember, it's a type of contra voucher. In the next video you will understand what is contra voucher, but here the cash has been deposited into SBI Bank. This means the cash flow has been within the company only, means from one account, that is a cash account, the cash has been deposited into another account which is an bank account. So first ledger is cash account and the second ledger is SBI Bank. Now another golden rule which says debit the receiver and credit the giver. Here SBI Bank is the receiver and cash account is the giver. So the entry is going to be SBI Bank account debit to cash account credit. Next statement is check of rupees 4,000 of HDFC Bank deposited into SBI Bank. Again, here the transaction has been from one particular bank account to another particular bank account. So the two ledgers are HDFC Bank and SBI Bank. Now you will have to find out which one is the receiver and which one is the giver. So deposited into SBI Bank. So SBI Bank is definitely a receiver. This means falls under debit, and HDFC Bank is the giver. So that falls under credit. So entry is going to be SBI Bank account debit to HDFC Bank account credit. Okay, the next one is going to be a bit difficult. Here it is salary due to with outstanding salary of rupees 15,000. Now here it is difficult because to find out two ledgers, one ledger is very simple to understand, which is salary. Now from the company point of view, that's an expense. so it will fall under debit. But what is the second ledger here? Now the second ledger is outstanding salary. So definitely salary is an expense, falls under debit, so outstanding salary is going to be the credit. So the entry is going to be salary account debit to salary account outstanding, that is credit of 15,000. Now the next entry is a petty cash account opened with cash of rupees 5,000. Here again the transaction has happened between two accounts. Now petty cash account is the first account or the first ledger, and another is cash account. So there are two ledgers. Now who is the receiver? A petty cash account opened with cash. So this means from cash account money has been given to petty cash account. So petty cash account is the receiver. This means that's a debit. So the entry is going to be petty cash account debit to cash account credit. Now the final statement is interest paid to Mr. Shyam rupees 8,000. Here interest has been paid, so this means this is an expense. Now here it has not been mentioned that whether it is paid in a cash format or whether it has been paid in a check format. So if it is not mentioned, by default it is a cash transaction. So the entry is going to be, because interest is an expense, so it falls under debit. So the entry is going to be interest account debit to cash account credit. So this is how a voucher entry need to be done and understand at first before you go for the tally. This is it for the video. Thank you for watching. Have a nice day.